Hello everybody. Welcome back. As always, for the Sunday stream, we're going to dive into Bitcoin's price action. This stream, we're going to remain focused more on the higher time frame here, as there's a lot of variations to observe on the higher time frame. And, once we've dialed down the true count for the higher time frame, we can start diving more into the lower time frames. But it's more important to be aware of the higher time frame right now. So that's the reason for this stream to remain on the higher time frame. We're going to take a look at the bullish counts first, then take a look at the bearish counts, and then take a look at some variations that are a little complex, but they are true. So that's something that I always like to preach. As long as it's valid, continue to observe that count, and then place the appropriate weight on all your counts based off of probability. So with further ado, let's go ahead and jump right into it. Like I said, we're going to start with the bullish counts first. So as of right now, we truly only have one bullish count. There is alternatives we'll discuss, but for right now, we are maintaining that this is a completed correction, an A, B, C, for a wave 4. Meaning this is the macro low for right now, the last stand for the bulls on a macro scale, where we finished right within the wave 4 territory, 0.3414 to the 0.382. The only thing that is troublesome about this perspective, where this wave 4 is in and we're working on this wave 5, is that the only way we can move up is with a leading diagonal, because of the nature of how we came up here. This right here is a through-wave move, so we can only see this as a or W. We corrected, and then we pushed up again. This could have been another potential A or a 1, but we immediately took that low again, which disregarded that. So this remained to be a W, X, Y. The only way we can build a bullish pattern off of the lows with a three-way move is with a leading diagonal, where we're going to expect all of the succeeding waves to also be three waves. So three-wave move up for wave 3, three-wave correction for wave 4, and three-wave move up for that wave 5. So we want these lows to be maintained. We want to continue bullish market structure. Break this high and create a new higher high. Correct for a new higher low. And then again, continue to create bullish market structure. From a strength perspective, once again, the intermediate wave 1 was about this strong. So we can, at a minimum, expect price to reach the moderate targets, the 1618 to the 175, but we're going to expect a little bit more of a push up into this territory. There's even potential where it could go to the 2618, a double extension. But again, we like to have a moderate conservative approach. It all depends on how it folds out. If this is just a regular 3-wave move, or a regular 5-wave impulse for wave 3, once again, we're going to expect this moderate push up here. If this turns out to be a large, another 1, 2, meaning we have a 1, 2, then 1, 2, we could really push up for an extended wave 5. It just depends on how this unfolds, really. We're getting a little ahead of ourselves, but like I said, we like to be aware of our targets and how we're going to get there. Once we get to this point, we can be a little more flexible on how high we're going to go. But once again, this is really the only true bearish count, the true bullish counts, if we're maintaining a wave 4 has been completed. Alternatively, there are some ideas that were brought up in our community. There is one idea that was brought up as a WXY, where the wave 4 is not in. Let's go ahead and discuss that. So again, here's our wave 3 terminations. Nothing's changed here. It's a matter of saying that these wave 4s are not completed yet. There's really only two ways that I can see this. This is the idea that was brought up within our community. It is valid. It does have a good story and narrative to it as well. The one thing I would like to see, though, is to see this triangle, this proposed triangle, the A, B, C, D, E, be nearing completion either pretty much this week, because we want to have a time relationship with the W and the Y. The more that this Y goes on further in time, the less probable it is from a structure perspective, because we like to see that relationship, that similarity in time. Alternatively, we could even say this is a potential WXY. I'm a little hesitant to truly classify this as a WXY, but it does have the makings of one. Here's a clear three-wave correction. Then we have a connector wave, a clear three-wave correction. Then we have a connector wave. Now we need to see if this low is going to be violated or if it's going to be protected. From a time perspective, we're still well on track for the timing of an intermediate degree. However, the further we go on, the further we get disassociated with the timing of this correction, which was our wave 2 correction. So this is our wave 4 correction, and this is our wave 2 correction. So let's just tidy this up and then compare them. Bring this over here. As you can see, it's going beyond the timing of this wave, of the prior correction, the prior intermediate wave 2. Which is kind of a signal that, hey, this may not be a valid count that we're observing. This may not be a wave 4 that we're observing here. So it's kind of just a signal, just like a red flag that, hey, the more that this goes on, the less likely that it's a companion correction. But once again, to keep ourselves grounded, when we think about intermediate corrections on the wave degree, we're still well within the parameters of a intermediate correction. Even if we were in a WXYXZ, we're pretty much starting right here. We still have a lot of room to go to stay within that timing of completion for an intermediate degree. So everything's still there from a timing perspective, but once again, we're just aware that it's exceeding the prior correction's timing. And then lastly, from a strength perspective, we did like this low right here as being the wave 4 low because it's completed right within the wave 4 zone, 3414 to 382. However, it can still close above the 0.5 and remain bullish and be valid for wave 4s. So once again, just like we discussed in the last stream, this level right here is going to be key. It's key level to remain bullish for our bullish counts. Now, there's potential we're still bearish, right? We do have two bearish counts that we have been monitoring. I'm going to take a look at the one that seems more probable. which is going to be the 1-2-1-2 scenario. Last time we discussed the potential where this wave 2 was not in. We may have to pivot it over, where we expect the high to be broken one more time, which looks like something that we're expecting right now. It just depends. I can see us unfolding two separate ways. I'd say this one is more likely from a structure perspective. This one is more forced from a structure perspective. Here, we'd be looking at a flat, which would also provide weight to the narrative of a 1-2-1-2. When we have 1-2-1-2s, nesting 1-2-1-2s, the narrative is usually when this first correction is a flat, the second correction is likely to be a flat as well. Same thing with zigzags. If the first correction was a zigzag, the second correction is likely to be a zigzag. This places weight on the 1-2-1-2 scenario as well. So there's a lot of weight behind this, and also we're still well within parameters for a time invalidation, because we don't want this minor degree wave 2 to go beyond the timing of completion for the intermediate wave degree 2 of a higher degree. So we still have a lot of room to play with. Also, I don't think that this B wave is done. If we are in a flat, I do expect this to come down one more time, either to the regular flat zone, or we violate the low and dig down into the expanded flat zone, and then come back up to complete the C wave. Once again, I think this is more probable from a bearish perspective rather than this, because of the internal structure. It'd be forced because this right here, this leg right here, this three-way move, it's a WXY, which I have right here. We typically don't like to have complex corrections within a complex correction, which is what this would be. We'd have a WXY within this W. And when you do that, you kind of back yourself into an Elliott wave corner. You're forcing counts at this point, because we really shouldn't have complex corrections within a complex correction. The only time that we should really allow that is within an X wave. An X wave can literally be absolutely anything. But in this instance, we're observing a W wave. So that's why it's a little tricky seeing this, but we kind of have to be aware of everything, especially since this was a strong low that was put in. This was a very, very strong low. Look at that V pattern. So we'll be aware of this, but it's not something that we're really going to be putting a lot of weight behind. We're really going to be watching this one. Lastly, we do have an extreme perspective. And what I mean by extreme is that this is a expanding leading diagonal, which is pretty rare. The making is there, right? The structure is there. The internal structure is there. All three-way moves. It's just a matter of if this is valid or not. We have a lot more price action to go before we determine that. However, even though that this is still extreme, it's telling the exact same story. The prior count, we're looking at this as an A, and a B, and a C, or a flat pattern, right? Or maybe this is a protected low. We're going to have a W, X, Y. The only difference between this count and this one is the timing of the degrees. In this perspective, we're looking at a minor degree. In this perspective, we're looking at an intermediate degree. So it's telling us that the underlying trend is looking for a flat pattern. That's the underlying trend. Now, I still remain bullish. mainly because of the reason that we just discussed in when I was reviewing this count. We have a nice 3-wave correction here, dug right into the typical wave 4 zone, and on top of this, you observe this box, just like how we were observing in the other counts. This is the timing completion for this wave 2. Pretty much 1-on-1. Almost 1-to-1. We have a lot of good confluence, a lot of good factors saying that this is the actual wave 4 low. We put in a strong low. We hit our typical wave 4 targets. And we pretty much completed 1-on-1. We have time, strength, and good structure. All 3 check marks. Now it's just about maintaining, once again, bullish market structure and moving on up. That's pretty much everything that I wanted to go over for today, and pretty much everything I have at this point. We still need to wait for a little bit more price action to really determine what's going to go on here. If we don't take this high, and we take this low, we likely have to discount this. If we take this low, we would likely have to look at our alternative, this WXY, or look at the bearish counts, where we're looking for flats in both of these counts right here. So really, clear validation zones. So let's see. This will be a invalidation for our current bullish count with a leading diag. That would be the invalidation right there. For our bullish count. And it'd really have to break this zone right here. Be invalidation for our current bearish count. Because on our bearish counts, this is either an X. Actually, it's an X on all of them, pretty much. Well, so yeah, WXY or WXYXZ, or it's the 1, 2. So this is going to be the 2. And if we go beyond this 2, where this is another 1, 2, that's going to be invalidated. So clear invalidation levels here for our wave 4 bullish low, or this being an X for the alternative counts, or the 2. Or that 4 for that expanding leading diagonal. Actually, no, that 4 is over here. So pretty much that's it, yeah. This will be an invalidation for our bearish count and a validation for our bullish count. Clear levels to look at. In the interim, it's kind of just a guessing game. The only thing that's going to give us hints is how this price action unfolds in the structure. That's what's going to give us hints for the higher time frame. But once again, as of right now, we can make a case for either or. But as always, if you guys ever have any questions or would like to discuss counts, I'm always try to make myself readily available, and I do try to respond as quickly as possible, usually the same day. So message me publicly, or if you feel more comfortable, you can message me privately. However, I hope you guys enjoy the content. If you do, please like, leave a comment, subscribe if you're not subscribed, and feel free to drop by the Discord. Come check this out. Not only do we focus on Elliott Wave, there's a lot of other methods that we discuss and a lot of other strategies that we go over. And not even just trading, we also discuss a lot of psychological factors and risk management as well. So jump by the Discord, visit it, discuss any trading topics with us. We have a lot of coaches that go over a lot of other topics, like I said. But as always, I hope you guys enjoy the content and thank you for your time. Enjoy the rest of your weekend. Catch everyone next time.